Okay, welcome back to the next video in consumer maths, and this video we're going to be talking about goods and services tax, or GST as most of us know it. So here in Australia, GST is a tax that is applied to goods and services. Pretty much everything. There are some things that are exempt, but for the purposes of this, we're just going to be adding on or taking off the GST to everything. So essentially, it's a straight 10% increase on all purchases. And really, all you need to know is to apply GST to an amount increased by 10%. And we've talked about increasing by 1%. I think that's really all I really need to say about that. The thing that does confuse people though is if an amount has GST included, in order to be able to work out what that GST is, you can't just take away 10%, because once you've added 10% on, we're starting with a different number. So really, we've got what's going on. I'll just sort of write this in green. So we're starting off with an amount that is 100% of itself, and we're adding on 10% GST. This is and so what we end up with, an amount that includes GST is 110%. So I'm just going to say includes GST. And I'm hoping that you're all aware that 100 is 10 lots of 10%. So what we've got here is, try this in blue, 10 lots of 10%, and we're adding one lot of 10%. So this final amount here is actually 11 lots of 10%. People get confused by where the 11 comes from. And it's because we started with 10 lots of 10% and we added the GST, which is an 11th one. So to find the price of an item, or to find GST amount, because essentially we're just going to be separating the original price and the GST. So we need to divide by 11. That's what this is. And this will tell us GST. So to find the original price, you take the price that includes GST and we take away the GST equals the cost. And that's sort of the theory behind it. And once you've done it a few times, it'll make sense. So applying GST is a simple increase by 10%. If it's already included and you need to work backwards, you've got to divide by 11. Okay. So let's do an example. A couple of examples. So the first one, this is 1.5. And the cost of a $52.50 item after applying, so we've got $52.50, and we need to add GST. Probably the best way to write it. So essentially we're adding 10% of this to itself. So $2.50, 10% of this, dividing by 10, is $5.25. $7.75. Is that it? Is that all we have to do? I suppose we could go $52.50 times by 1.1. This is the 100%. That's the 10%. That's going to give us the same amount. And that's essentially it. So that's increasing this original amount by 10%. And the only new thing we've added in is that we're calling it GST. Okay, I'm just going to rub that one out and go to the next example. So there's an extra sort of step included here. So this example, a pearl bracelet costs a retailer $295.50 excluding GST. $295.50, and I'm just going to write excluding GST. At what selling price should it be marked if she wishes to make a 35% profit? So we want 35% profit, and we also need to add 10% GST to the final price. Plus right, so what we need to do, we can't add these together. So we need to increase this by 35%, and that will account for the profit. And then we need to increase the result we get by 10%. If we add these together, we're not getting the GST on this extra profit bit. So we've got to do it in 2 steps. So we want 35% of $295.50 multiplied by 0.35. That equals I missed a number. Equals 103.425. So this is money. I've put that extra thing in there because I don't want to round until the end. So now I'm just going to add this and this, and then that will be our increase by 35%. If I'd have had a 1.35, it will give us the final result. So $295.50 plus 103 equals 295. Here we go. $398.925. So I'm just going to leave that extra half a cent in there until we get to the final. So this is our cost plus the profit. But before the retailer can sell that to someone, they have to include the GST. So part 2 is 398.5 times 0.1 equals $39.95. So I've just moved the decimal place one space. And then we add this on. So let's just change colour. I can use this. What do we get here? 5, 7, carry 1, 10, place. Okay, so now I'm going to round it. I'm going to cut it off there, which means that 1 will go up to a 2. So our final retail price, which includes GST, is $438.82. Okay. There wasn't a dividing by 11 example there, but I think we're going to get to one. Okay, so that's increasing an amount by 10%, so including the GST. I'll rub this out. Okay, now we're going to talk about what we call the GST chain, which talks about how GST is passed on through various layers of business and eventually gets passed on to the customer. And it sort of talks about how the government collects all the goods and services tax along the way. So each of these would be considered a business and would be registered with the Australian government. And as part of that, they collect GST on behalf of the government. And I'll sort of explain how the government gets it and how people along the way essentially don't have to pay GST. So the example I've come up with in my noggin is, say we have a manufacturer who, I don't know, makes tables, and he buys a whole load of wood. So let's say he buys a whole load of wood which costs $500. But in buying that, he would have to also pay the GST. So the person who he bought that from, the lumber yard or the whatever, we just won't worry about that for now. They would also add on 10% of this, $50. So the manufacturer actually pays out of his pocket $550 and gets a receipt. That's also important. The manufacturer then turns the wood into some tables and decides, all right, I want to make some profit, so I'm going to sell those tables to the wholesaler, who the manufacturer then charges So sort of keep this bit separate in your head. So we're only really talking about profit on this, because this sort of works itself out. So say the manufacturer makes the tables and then he sells the tables to the wholesaler for, let's say, 1,500. But he also has to charge GST. So he's adding 10% of this, which is $150. So the wholesaler, out of his pocket, pays $1,650, which has GST in it. Okay, so what happens now is the manufacturer has collected $150 GST on behalf of the government. And what they would do, when the manufacturer receives this money, they would take this 150 and they would put it into a separate account. So this is GST account. So the manufacturer puts the GST from their sale into the account, and then at the end of the tax year, assume that this happens for every single sale of goods or services. At the end of the year, the manufacturer would come up and say, oh, I had to spend $50 in GST to buy that wood, so they can claim that back. So essentially, this $150, $50 that the manufacturer paid, they get to keep when the tax is worked out. And the other $100, that's what goes to the government. So let's just rewrite this so that we can sort of see what's going on. So this is the claim. And this is the government. Does that make sense? I'll go through this step a few times. So essentially the manufacturer only paid $500 because they kept their receipt for this bit. They could claim it back after they'd sold their wood turned into tables. So they keep that 50 as part of their end of financial year tax audit, and the extra goes to the government. Okay, so the next layer is the wholesaler puts the tables in their warehouse, keeps them there for a while, and then they decide, well, they find a retailer who's willing to buy those tables. So the wholesaler says, oh, well, we want to make some profit because we put them in our warehouse, so we're going to sell them to the retailer for, say, an extra $1,000. We're going to sell them to the retailer for that. But the wholesaler has to charge GST on this, so they're going to add 10%, which is $250. So in total, the retailer pays $2,750. Now, like I did over here, the wholesaler has now collected this GST. Write that there. So they put this $250 into their GST account, and at the end of the financial year, they want to claim, they can claim this $150 back because they've got the receipt from the manufacturer. So really, this $250, let's just draw it in. This $250 goes into the wholesaler's account, and they have $150 that they get to keep because they paid it, and then an extra 100 is left over, goes to the government. Okay, so the final step is, let's just say the right amount of customers come in that want to buy all the tables, just for making the example simple, and the retailer decides, well, I'm going to make some profit. I'm going to sell all 10 tables for, let's say, $4,000, of which they have to then add on the GST, which is an extra $400. So really, all the customers, when all the tables are bought, have, isn't a fraction. Once all the customers, all the tables have been sold, the retailer has $4,000 plus the GST. So the retailer has received this in total. But the retailer has now collected $400 in GST, which they put into their account. And they're going to say, well, we spent $250 GST from the wholesaler. At the end of the financial year, they claim that back. And what's left over? Another $150, which goes to the government. And finally, the customers bought the stuff. So really, along the way, yes. So along the way, the government has collected all this money. $350, and also each person along the chain has made some profit. But the main gist of it is the manufacturer pays this to where they get the wood from, but then they claim it back once they sell to the wholesaler out of the GST that they collect for what they've turned this stuff into. So it just goes down the chain. In the end, the customer pays a whole lot. And because the customer isn't a business, they're not going to then make a profit, which they can then claim this bit back. Okay, now let's look at just a few examples, probably where there's just one step along the way. Okay, so this GST chain example. Well, there's a couple of examples. Find the GST amount involved in a purchase which cost the consumer $320. So this is the divide by 11. So find GST from $320 purchase. So essentially the GST is included in here. So what we're going to do is 320 divide by 11. 20 divide by 11. $29.09. So that wasn't too bad. Okay, so that's just working out the GST. So the next example here, I'm just going to rub that out. A wholesaler charges a retailer $520, including GST, for a lounge couch. So a couch. $20, including GST. How much GST was involved in the transaction? Okay, so $520 divide by 11, which equals 40, $47.27 GST. So that's same process again. The second part of this question, how much did the couch cost the retailer after claiming GST credit on the purchase? So essentially that's just a fancy way of saying this number, take away that number. Because this includes the GST, and if this is what they're claiming back, then it's 520. So after claiming GST credit, how much is the couch? So we're going $520, take away $47.27. Equals 472.72727. So I'm just going to round that to 73. Okay, and I think that's where I'm going to leave this video.